APAC Equity Daily Wrap, August 21, 2024. Asian stocks traded lower today, weighed down by declines in large tech and financial shares. Japanese equities fell as the yen advanced to a two-week high against the US dollar. Semiconductor stocks dropped after US peers took a breather from their recent rally. Oil stocks also declined amid concerns over global energy demand and the prospect of a ceasefire. On individual stocks, JD.com was particularly weak following Walmart's divestment of its 10% stake in the company. The share price dropped 12% at the Hong Kong Open, stabilized around that level, and then recovered slightly in the afternoon, closing down 9% for the day. While Walmart's intention to fully dispose of its stake in JD could be seen as a negative, it might actually remove an overhang for the stock. JD.com does not heavily rely on Walmart for its e-commerce business and is also buying back shares to mitigate the pressure. In the long term, JD's fundamentals will be the key focus, although the company still faces significant challenges, including slowing Chinese consumer demand and competition from TikTok and PDD. In China and Hong Kong, speculation about the timing of Apple's September event supported a rally in Apple supplier stocks, while the reaction was muted in Taiwan and South Korea. Another possible reason for the outperformance of Chinese hardware stocks could be the retreat of bank stocks, leading to fund flows back into tech and growth names. Tomorrow, investors will be watching to see if Alibaba wins shareholder approval for its dual primary listing and then goes through the regulatory approval process for the Stock Connect program on September 6. On the currency front, China has dialed back its support for the yuan, with the midpoint set only 20 basis points stronger than the market rate, a far cry from the 1,300 basis points a month ago. The offshore RMB has risen sharply from 7.30 at the start of the year to the current level of 7.13. This gives PBOC more room to cut interest rates without worrying about currency depreciation, though China does not seem inclined to rush this before the US election results. The current yuan appreciation is a passive move, as the US dollar has fallen 3.6% and the euro has gained 2.3% against the RMB since August 1. The focus of the global market now is on Fed Chair Powell's speech this Friday, as a rate cut could provide the PBOC with more easing room.